sticking with the words extremely strong. Economist John Lonski with me this morning. Extremely strong economy. I don't think you agree with that.
No, I don't agree with that at all. I mean, the economy was extremely strong. Why is U.S. consumer sentiment at a record low? I can't figure this out. I think you have to pay attention to consumer attitudes. Also, you know, the S&P 500, your large corporations are doing great. Your double-digit percentage gains in earnings. And believe it or not, I think S&P 500 revenues for the first quarter are approaching 10%. That's insanity, given that GDP, nominal GDP, is at 5%. Great news. But the small businessman, they're still, you know, they have it tough. They're struggling. They have narrowing of profit margins, higher costs. And the person who was just on talking about beef. Yeah, I think it's incredible to stop and think right now that in this area, I believe that the average price for a hamburger at a neighborhood bar and grill is approaching $20. That's incredible. You want to order a steak? $35 to $40. And I'm not talking about a fancy restaurant in Manhattan.
Retail sales up 4% on an annualized basis. That's a strength.
Good. That's good. But still, if you subtract from that the rate of inflation, 2%, then you're looking at real growth of 2%. And 2%, real growth of 2% is good. It's solid. I like that. But those people that are talking about real GDP growth of 4%, 5% or higher because of productivity, keep dreaming.
Okay, an emphatic Lonski. We're not done yet. Mr. Warsh, in a few minutes, he goes before the hearings. He's President Trump's pick to lead the Fed. Kevin Warsh, that's it. He's going to face some criticism, I'm sure. But the question where everybody wants answered is, when is he going to lower interest rates?
Don't hold your breath.
No?
I think right now the market is not expecting a rate cut until 2027, and in 2027 at the earliest, September, more than a year from now.
But the president put him in there to lower rates.
Well, he can maybe try a small rate cut, okay, 25 basis points. Let's see what happens. But if the bond market reacts adversely, if we have foreigners desert U.S. Treasury bonds, and that pushes up longer-term bond yields, that decision will be regretted quite quickly.
Watch out for these foreigners, John.
Yeah, well, hey, 30% of U.S. Treasury debt is owned by foreign investors. You know?
Okay. Tom, when is Warsh going to lower rates?
I think he's going to do it sooner than John thinks because he's going to reduce the balance sheet at the same time. So he'll take liquidity out of one side of the bucket. He'll add liquidity on the other side of the bucket.
10 seconds to respond.
Okay, if you reduce the balance sheet, that means higher interest rates at the longer end of the Treasury yield curve. Mortgage yields go higher.